we got a call. She left me, but that's okay. She'll be back.
Sorry.
It's okay. She's back. So we're just discussing appraisals. And can you explain to them what an appraisal is?
Appraisal is basically determining how much the home is worth. The lender will order the appraisal, and then the appraiser will come out and check out how much the house is worth and all that good stuff to make sure whatever they can lend you is the amount of how much they can lend you.
Perfect. Yeah, so what an appraisal is, so let's say for instance you have a car and you need to sell it. You need to get it appraised. So it's a value of something. So in real estate, we have what's called an appraiser. So we're real estate agents. We're licensed by California to sell and list properties, help buyers and sellers. So there's a third party that does the appraisal. And when you're in contract, because you're getting the loan, you have this person that does the appraisal. They do the analysis, figure out how much the home is actually worth. So Vee, who orders the appraisal? When you're in contract, who orders that?
The lender will order your appraisal.
Okay, great. So let's say I'm a buyer, I'm in contract, and the lender orders the appraisal. Do I get to choose who my appraiser is?
No.
No. So it's definitely not biased. They usually use a pool of appraisers. They send a request, and whoever is available to complete that appraisal report, they would accept the appraisal. So let's say I'm paying cash. Do I need to get an appraisal?
No.
And why is that? Do you know?
Because you're not borrowing money from your lender. It's all cash, so it's just whatever you offer for that property.
Perfect. So yeah, if you're paying cash, no need for an appraisal. You're basically saying, I'm gonna offer this price, and that's the price that you're gonna go with. However, if you are doing a loan, you need to get an appraisal because you're only able to lend on the appraised value. Say we're in contract and I have a property that I'm offering. It's listed at $700,000. I offer $750,000. And the appraiser comes back and says, that house is only worth $725,000, which happens. It's lower than what I had initially offered. What happens then, Vee?
What happens then is you, the buyer, will be responsible for the $50,000 gap, or what happens is you can then negotiate with the seller to come with an agreement on the purchase price of the home.
Okay, exactly. So let's say there's a gap. You could say, I need the price to be modified, and your agent will work with you and say, I need to modify to the appraised value. The seller, best case, the seller says, great, I'll lower my price, and we move forward. Second option is the seller says, no, I don't think so. There's a lot of people lining up. You offered this price, it came in lower, bridge the gap, pay the difference. And if you say, I don't have any money, I'm not gonna pay anything more, there's no agreements, so the offer is pretty much dead and it goes back on the market. Today's market is very competitive, so I want to talk about appraisal contingency removal. So what is appraisal contingency removal? Okay.
My God, stop.
Oh. So I wanted to discuss, in this market, it's very competitive, so there's an appraisal contingency removal that I wanted to discuss. The pros and the cons and the risks. Appraisal contingency removal, what does that mean? Let's start with the
Contingency itself.
Yeah, what is a contingency?
A contingency basically protects your money, the earnest money deposit for the buyer. So if you find out anything along the way, you're able to cancel the contract, and you still get your earnest money deposit.
Yes, so you have the contingency in place. So the appraisal contingency protects you if something happens with the appraisal. However, if you're in a competitive market like we are and you decide to remove the appraisal contingency, you're basically saying, if I offer $750, it comes in lower, you're going to purchase it at whatever price. You have that cash to bridge the gap. So that's basically what it is. Of course, the risk factor is if it doesn't come in at that value, then you already said, I don't care, I'm paying the difference. But yeah, basically that's what appraisal is. I mean, it's a big part of the purchasing. But definitely work with your real estate agent, go over all of the pros and the cons, and make sure that you're putting yourself in a really good position to get your offer accepted. Right?
Yeah, that's pretty much it.
Did you have anything else you want to add with appraisals?
No, I mean, usually I don't encourage my clients to remove any contingencies just to make sure, they're protected. But again, every client is different. So you want to make sure you do whatever's best for you at the end of the day.
Yeah, exactly. Every situation is different. Every house is different. But really understanding the appraisal part of it, and especially in today's market. So if you were to purchase a property and your max is $700,000, you definitely don't want to go looking for homes at the $700,000. You want to look a little bit under, so if you have to go over, you have that flexibility to negotiate.
Yeah.
Perfect. That was it. Hopefully you guys enjoyed that and learned a little bit. And if you're in the process of buying a house and you don't have any realtor, let us know.
Thank you for watching.
Have a good day, guys.